A lot of debate has occurred in recent years about the spending and taxing practices of the U.S. government. In this presentation, we will take a look at the U.S. federal budget, including how the money is spent and where the money comes from. We'll also analyze the federal budget deficit and what has caused the deficit. The U.S. budget is divided into two parts: mandatory spending and discretionary spending. Mandatory spending is required by law. Congress cannot alter the amount spent on these programs without altering the programs themselves. Discretionary spending is the part of the budget that can be adjusted each year by Congress. As you can see from the graph, mandatory spending is by far the largest part of the budget. This chart breaks down what is included in mandatory spending. Social Security accounts for the largest chunk, followed by Medicaid and Medicare. Also included are unemployment benefits, disability benefits, veterans benefits, and pensions for government workers. Not shown on the chart, but considered mandatory, is interest on the government's debt, which amounts to another 6%. Added together, mandatory spending amounts to 71% of the entire federal budget. In other words, 7 of every $10 spent by the U.S. government is required by law. This chart shows the breakdown of discretionary spending, the 29% of the budget that Congress gets to allocate each year. As you can see, military spending accounts for the bulk of the discretionary budget, since the U.S. spends far more on the military than any other country in the world. Other programs in the discretionary budget include education spending. Pell Grants come from that slice of the budget. The Center for Disease Control, with headquarters in Atlanta, is part of health spending. Federal investment in scientific research is part of the science budget. The U.S. spends around $23 billion in foreign aid as part of the international affairs budget. Putting it all together, this chart shows the entire proposed federal budget for 2015, giving you a perspective of the size of each piece. The total budgetary request for 2015 is $3.9 trillion. Social Security, Medicare, Medicaid, and the military account for 76% of all the money spent by the U.S. government. The expected government revenues for 2015 amount to $3.3 trillion, leaving an expected deficit of $564 billion for the year. This slide compares the amount spent by the U.S. government on the military in 2013 with the military spending of other countries. As the graph demonstrates, we spend nearly as much on our military as the next 14 nations combined. This does not include items like producing and maintaining nuclear weapons, veterans benefits, military pensions, or spending on counterterrorism and intelligence gathering. Most of the money to pay for the budget comes from taxes. This chart breaks down the different kinds of taxes collected by the government and their relative share. The largest source of government income is through personal income taxes collected from individual citizens. It is estimated this will amount to 46% of all money collected in 2015. Corporate income taxes actually amount to a small percentage of government income and have decreased significantly over the last 50 years. Payroll taxes refer to money collected for Social Security and Medicare. Even people who receive their income taxes back as a refund still pay the payroll tax, since they fund mandatory programs. Excise taxes are tariffs on imported goods. Other taxes will include estate taxes, which are charged on inherited estates over $3 million in value. Taxes have been controversial since the United States began. The Revolutionary War was fought in large part over the issue of taxation, and taxes are easy to dislike. On the other hand, as the Supreme Court Justice Oliver Wendell Holmes pointed out, taxes pay the costs of having a civilized society. Do you agree? What part of the government would you want to do without? Would we want the federal government to stop building roads and bridges and have them constructed by private companies instead? If that was the case, those roads and bridges would no longer be free, and we'd pay a toll for each one. Do we want the federal government to stop regulating the quality of food and drugs, or no longer provide air traffic controllers, or disband the military, or close all national parks, or get rid of Pell Grants? When we think about taxes, we must think in those terms. This chart shows the nominal income tax rates people pay, depending on your level of income and whether you are married or single. The highest tax rate is 39.6% if you make more than $400,000 a year. However, most people in the highest income brackets earn their money from investments in the stock market. All income earned from those investments is called capital gains and is actually taxed at 15%. The richest people in the country pay the same tax rate as someone who earns $30,000 a year. In a discussion of tax rates, it is worth comparing what Americans pay in relation to other countries. When that is done, we find that U.S. personal income taxes are relatively low. This graph shows where the U.S. ranks on taxes paid on $100,000 in income. Despite the continual complaints, taxes on our income are low compared to other modern industrialized nations. The United States is by far the wealthiest nation in the world, with a gross domestic product of over $16.2 trillion in 2013. Americans are 5% of the world's population, but account for more than 25% of the world's economic output. China had the world's second largest economy, with a GDP of $9.4 trillion. The total debt of the U.S. federal government is currently about $17.6 trillion, or larger than our annual gross domestic product. The relationship between debt and GDP is the figure that economists find important, rather than the total size in dollars. The last time the U.S. debt was larger than our GDP was at the end of World War II. Under President Clinton, the U.S. had budget surpluses. By the time his presidency ended, the total federal debt had been reduced to $5.6 trillion. By the end of the Bush presidency, the total federal debt had increased by 90% to over $10.5 trillion. There are several reasons the debt exploded under President Bush. The country embarked on two expensive wars in Afghanistan and Iraq, and increased Medicare drug coverage, while reducing taxes at the same time. That huge increase in expenses, while reducing revenues, is when the federal deficit began to balloon. The recession that began in 2008 made the deficit worse by diminishing tax revenues. Then government business bailouts and stimulus programs added slightly more. Altogether, that is why the federal debt has grown by over 300% in a decade. Many people express concern about who owns U.S. debt, and often incorrectly assume we are in hock to China. The reality is much more complicated. As this graph shows, the largest holders of U.S. debt are actually American citizens and American companies. The next time someone says that China owns America, you can tell them they are incorrect. It is hard for people to comprehend the amount of money that passes through the U.S. economy or is spent annually by our government. Despite the enormous size of the deficit, it is not yet a fiscal crisis due to the enormous size of our economic output. As the economy has improved, the rate at which the debt is increasing has also slowed. However, the deficit must be brought under control and eventually start to shrink. That will mean controlling the costs of mandatory programs like Medicare, reducing what we spend on the military, and increasing tax revenues through a continually improving economy.